Hello, everyone, and welcome back to another episode of the BIF Bites podcast. I'm your host, as always, Jerry Me, joined by my two awesome co-hosts, Mr. Brendan Flaherty and Mike Long. How you doing today, guys?
Doing well. How you doing?
All things considered, hanging in there.
Yeah, definitely. Still in lockdown mode. It'll be fun going back, listening to these episodes to kind of hear where our heads were at in the middle of the quarantine.
The chaos.
But, for right now, we're living it.
Yep. That feels like Jack Nicklaus in The Shining. I mean, Jack Nicholson, not Jack Nicklaus.
Yes.
That would have been a good cast.
Yeah, that would have been a good character. It would have been a lot more boring. Yeah.
Comes through the door with his 5-iron.
Yeah. He never misses with that 5-iron, Mike.
Yeah. All work and no play makes Brendan a boring boy.
Yeah,
Is that what you're trying to tell us,
right.
Brendan?
That's right.
Well, I mean, that's as good an intro as anything to get into our first topic. We're going to save our question of the episode towards the end because it has more to do with our topic at the end of the episode. But right off the bat, Mike and I really wanted to talk to you about what it's like running a practice from home. Everyone's in work from home mode.
Yep.
And financial advisors are no exception. So give us an idea of what it's like for you.
Yeah, I mean, it's interesting. So I was home less than most people, as the Department of Homeland Security has deemed our industry as essential, which I think it makes sense because people need money. We need to be able to provide liquidity. We need to be able to process payments and checks and things like that. So a lot of that you can do from home. But we had been open for pretty much the entire time. And then 2 weeks ago, one of the women in our office, her daughter tested positive. So they shut our office down for 2 weeks. We just reopened the day before yesterday. So I've been back in the office for 3 days. But I did spend 2 weeks running my practice from home. And it's tough. I mean, you rely on technology that everyone else is trying to get a piece of, so it's not as reliable as what you're used to. And you're talking. It was much more hectic. People were, as we started getting 2-3 weeks into this, people started getting more and more anxious and needy and concerned. And people that you would normally talk to, once a month, once every few months, you're talking to, every day or every other day. It's pretty much repeating the same thing over and over and over again, which is to, kind of stay the course and don't react to what you're seeing in the market. Very few people probably needed to do more than just a simple rebalance, but you got to talk them off that ledge every single day.
How do you get to them all? I mean, is it just literally the entire day you're on the phone?
Yeah, it is.
To return all these calls? It
is, and you want to try to. It starts by trying to reach out to the people that are going to be nervous. This is. I've been with a lot of my clients for a long time now, and this is not the first one of these that we've gone through. But there are people who historically haven't gotten nervous who definitely did in this one. That Monday that we lost 12% on the Dow and around that same amount in the S&P, it changed things. And so it's just, you got people calling you, you're calling them, and it's hard to get back to every single person every single day. Plus you're getting emails, so it was a lot to manage. And, you're down. I went from working on, multiple monitors to being down to just my laptop screen, which is, that changes things too. So it makes you less efficient. And, in the middle of all this, you're trying to also make sure that you're up to date on all of the information that's out there now. And it's changing. It's a very fluid situation. It's changing on a daily basis. And you want to make sure that you are keeping up with what because the things you maybe took for granted yesterday may no longer be true.
Yeah. I mean, things are changing so rapidly. The market's basically rubber banding. It feels like on a daily basis. It's hard to keep up with current events and also all your clients at the same time.
It's tough. And there was a couple of things that came together to really create this downturn. I mean, obviously the oil issues with Russia and Saudi Arabia would have on their own been some form of a market event. It definitely wouldn't have been anywhere near as substantial as what we've seen on its own. But the coronavirus potentially wouldn't have been either, at least initially. And I think those two things came together. But we're getting to a point now where we're starting to see at least a little bit of resolution, a little bit of a reprieve. And the VIX, which was, trading north of $85, is now trading somewhere below 50. And bonds have settled down, and we're getting normal functioning markets again. And we've sprung up about 20% off the ground. So, we're in that middle place where we're not quite sure how long is it going to last, and is the next step going to be up or down? And so it's a very difficult thing to read right now.
Yeah, definitely. So what sort of changes have you made to your daily routine as far as, working with clients, obviously working from home for financial advisors? There's a lot of things similar and a lot of things different. What would you say have been like the biggest changes you've had to make?
I've had to let go of some of the things that I normally read. I don't have time to get to, nor do I have. It's tough to access the same things, even though you're on the same machine. It's like I feel like I'm flying a different plane. You're just not used to the method that you're dealing with, and so I've been trying to watch more of. I usually avoid things, not to cast any stones, but I typically don't watch things like CNBC on a regular basis. And I've been trying to watch more of that because I understand that that's what my clients are watching. I want to understand what they're reacting to. I've tried to, my time has really gone from trying to be as proactive as possible to I am very much reactive, although I'm starting to get some feet underneath me now. But for a long time, I was very reactive. And it's, the kids are home doing their schoolwork because they're all out of school. And between the dogs barking and the kids coming in to talk to you, it creates just a different environment than what you're used to, and you just have to cope. And all of my clients have been extremely understanding, and they get that, everyone's kind of been thrown into this.
Yeah, well, they're in the same
Absolutely.
situation.
Yep.
Adapt. Are you involved at all with the homeschooling now, or
yeah,
or
yep. And so my son is in 8th grade, and he's dealing with some math concepts that he hasn't had to deal with before, and I think it's difficult to convey that stuff to people who have never been exposed to it via YouTube or via Zoom. So I've been a lot more engaged in the kids' studies as well. And I do things like I'm the assistant scoutmaster for my son's Boy Scout troop. All of that stuff has gone on Zoom, so I'm doing that as well. So everything's just a little bit different, but it all happens now during, the work hours have expanded substantially, and everything's kind of competing for the same amount of time.
What are you doing just to keep the wheels on, just to stay
I am drinking copious amounts of alcohol. No, I'm trying to get out at least for 40 minutes to an hour a day with the kids and with my wife and the dogs, and just go for a walk. Just kind of get out. And it's amazing where, I'm seeing neighbors. I've lived in my house for the last 7 or 8 years, and you just don't see people normally like you're seeing right now. Everyone's out. The streets are busy in terms of just people kind of enjoying, where they live, as opposed to having all of these other things that they have to do. So that's been, one nice thing. But yeah, that makes a big difference. It helps to be able to kind of take a pause and have lunch with the kids, or take a pause and go for a walk. Those are things that don't normally, those are some luxuries that I don't usually get, working in the office. I don't get to see the kids or my wife during the day.
Definitely. Yeah. It's all about kind of making those changes and, still finding ways to enjoy life where you can.
Yeah. And going back to the behavioral, episode that we did a few times ago, it's trying to remain as objective as possible. And it gets hard because there's just so much emotion around you, because people are nervous about their health. They're nervous about their money, and it's hard to be that objective voice and trying to stick to the plan because everything is screaming around you to not. And so it's trying to remain that having that objectivity is important.
Well, yeah, that's good. That's good feedback, and good to kind of get a slice of that life. Hopefully, our listeners are meeting those same challenges, because there are lots of them. Like I know things as silly as like webcams are almost completely sold out
Yeah.
everywhere. I was seeing webcams that usually go for $50 are now going for $350.
It's not just
as
toilet
people
paper.
not just toilet paper. Really interesting to see kind of where our societal keystones are when something like this happens.
Yep. It's just, again, it's hard not to be emotional. People feel threatened from multiple angles at this point, and I think it's to be expected that we do get these, these again, people who are normally very, very level-headed have been pretty emotional during this. But to be fair, we haven't made a whole lot of changes, which is good. So they still at the end come back down to that objective plan that we've been dealing with.
Well, that's good to hear too. Yeah, a lot of people have asked me about our business, but the CFP business, and that's been interesting. I was talking to one of our sales folks, and he was having March was his best month ever.
Yeah.
And it kind of makes sense and surprises people that ask me that. I was like, well, no, it's actually really robust right now because everybody's trapped at home and they're saying, well, I've put off the CFP long enough and I might as well get started with that.
I'm already bored. I might as well get bored more, right?
Yeah.
Yeah. All that time at home. I would say the same, Mike. I feel like we're busier than ever. I mean, so as far as we know now, the July exam is going to happen as normally scheduled. There's no word as far as it being postponed or canceled or anything like that. So, we are operating under the assumption that it is going to happen and, studying as fitting a July exam study cycle. But, it's obviously something we're going to be observing over the coming months just to see how the situation changes.
Yeah,
sure. Yeah. And certainly as we hear things, we will talk about them on the podcast as well.
And hopefully we're all coming out of our bunkers, long before then.
All right, guys. So for our next topic, this is kind of a big one, but we don't actually know if this is going to show up on any actual CFP exams, if it's going to be incorporated or not. Definitely not going to be showing up on the July exam, but the new CARE Act that just got passed. Do we want to talk about that? Even though it's probably not going to end up seeing the light of the CFP exam, it's still something that affects, a lot of people.
Yeah, both from a practice standpoint and a personal standpoint.
Yeah, especially on the heels of the Secure Act. We've got two things that are impacting particularly retirement discussions. So I think that's kind of where I've started in reading this. And there's going to be a lot of information coming out as that's very fluid, but I'm trying to master the retirement stuff first.
Yeah. And I would say the one I was most focused on is the student loan changes and the basically deferment of interest accruing on student loans. I think that's going to be one of the most effective pieces as far as for most number of people that it affects.
Yep.
Yeah, outline that for us. I was asking you earlier, and what did you tell me? Pushed back to September?
Yeah, I believe it's September. So we'll link this in the show notes as well. But the National Law Review actually came out with a really good breakdown of the CARE Act and everything that it affects. That came out. Actually, it looks like it actually came out today. I'm sorry. It came out about a week ago. But the National Law Review did this great breakdown where they go over every piece of the CARE Act and what it actually means. And for the student loans, now this is important because it is just federal student loans. Doesn't affect private loans, doesn't affect state loans like MIFA, just federal loans are going to be suspended through September 30th of 2020. So what that means is students with federal student loans don't have to make payments, and most importantly, interest is not accruing. So if students do want to make payments, 100% of those payments go to principal. So if you're one of the ones fortunate enough to, your job hasn't been affected and you have those student loans, I mean, this could be a great opportunity to really get ahead of the curve and, pay down those loans without having to worry about, interest working against you.
Yeah, sure. Okay.
So, I mean, it's pretty straightforward. It's just, payments are deferred. Interest is deferred. They're also suspending collections on student loans. So if you're already behind on your student loans, the government isn't going to be collecting on them until September 30th. Really, it's just a great, 4-month stopgap period where you can
hiatus.
Yeah, just get caught up or get your feet out from under you, and if you're already in a good place, it's a great opportunity to pay those loans down.
Yeah, for sure. Yeah, I like that. You said this was the National Review is what did this nice summary, Jerry? Is that what you said?
The National Law Review.
National Law Review. So I would trust that greatly. Just Googling things and getting into random articles, those make me a little bit nervous as I read some of this, because it's like, well, what about this piece? They've left out, half of what this provision is about. So what I'm trying to do is I have saved a copy of the entire bill, and then I'll read something and then go to the actual document and see if it syncs.
My rule of thumb whenever I look for things like this is look for the boring stuff. It might not be the most fun to read, but it's going to be the stuff that's boring, that's not going to have the spin and, opinion pieces inserted into it. And
just the facts, not the interpretation of the facts.
Exactly. So it's dry, but you know what you're getting.
Yeah. And at congress.gov, you can pull the whole thing up, but at the beginning, they do have a nice, outline of the sections. So it doesn't take that long to really find what you were looking for in any particular piece of this. But then it gets really boring as you click into the actual bill.
Yep. Boring is good in this case. Did you want to go into kind of how it affects the retirement accounts, Mike?
Well, a couple of things with retirement. You hope that folks don't need to dip into retirement monies for virus-related issues. Right. But I believe that provision is you can take up to $100,000.
That's correct,
and not be subject to penalty. So again, I hope nobody needs to do that, but that's nice that there's not going to be a penalty on top of taxable funds. But the biggest thing that I think we need to be aware of is not having to take the RMD for this year, and for some, in conjunction with the Secure Act changing the beginning date to age 72. Conceivably, some folks will actually have a 2-year period where they won't have to take an RMD. But I think that, that's really going to depend on their circumstances when they're talking to you about whether they should forego it or get it out of there, because there might be some good opportunity investment-wise coming up, and I just wouldn't automatically say don't take it if you don't have to. But what do you guys think about that?
Yeah, I mean, I agree. I think just like anything else in planning or investment related, it's a case-by-case basis. It's very dangerous and probably not good to paint with a broad brush on stuff like that, because there certainly isn't one size fits all. But if it makes sense for an individual situation to take it or to not take it, then I would follow that advice.
Yeah, I would say anytime it gives the individual the option, it's a good thing. It is good to have options. Like,
absolutely, this is a great thing. Yep.
In game theory, a core tenet of game theory is that the individual who has the most options is the most likely to win, because they have the most chances to capitalize on those options and make good decisions. And I think that's just what this is it's not going to be a good idea for everyone to take it. It's not going to be a good idea for everyone to defer it, but just having that option is powerful in and of itself.
Yeah, and a lot of this in the individual discussions can come down to, what's it in, and is there a major hit to be taken just to take the RMD? I mean, there's a lot of moving pieces to this, and that's why it's, like you say, it's got to be one-on-one type of discussion.
Right, and you also have to take into consideration that if people, again, depending on the factors, if people take it out, they may not have it applied to the investment when it reflates back up to maybe where it was or close to where it was prior to this virus impact.
The other main points are mostly having to do with like business loans and credit protection. So I mean, definitely some good stuff in there, but I feel the focus of those is a bit more narrow. Was there any other like major parts of the CARE Act that, really dials into kind of everyday clients?
This is not a big thing, but it's one of those where, oh, good, I'm glad that's there for folks. It's a really small amount, $300, but you can take an above the line deduction for charitable contribution. So I hope that motivates some folks who don't itemize deductions to go ahead and give $300 to charity, particularly, healthcare things right now. So I thought that was pretty cool.
Could you go into that a bit more, Mike, about why above the line is so important when it comes to charitable deductions?
Well, normally the only way we get a deduction is if we itemize in a situation where the itemized deductions exceed what the standard deduction would be. And a lot of folks now are just taking the standard deduction, and that can hurt charitable giving if they're no longer feeling like, oh, I'm not getting a tax break for this. But when we say, and that's below the line, that's after we've rolled all the income up, and then if we itemize deductions, that comes later. Above the line means that it's a deduction after we've rolled together the income. Then there are numerous deductions that can be taken to arrive at the adjusted gross income. Yep. And so this small piece, this $300 piece, is being put above the line. And I really hope it motivates people just to go ahead and give $300.
Yeah. To kind of give a real world example of why it's important. I actually ran into this on my taxes this year where I helped organize a charity fundraiser, and I collected the funds as part of the fundraiser. We raised like $3,000, which was great, and we donated it. And then at the end of the year, I got a 1099 from PayPal because I collected this $3,000 in fundraising. So I got a 1099 on the $3,000 that I had to pay taxes on, but because I don't itemize my taxes, I couldn't write it off.
Oh, wow.
So, it was fine. It was for a good cause, but that just kind of just is an example of why above the line is important, where, even if you're not itemizing, you can still take that deduction.
Absolutely. And that also is usually good for a question or two on the CFP exam, above the line versus below the line, or for AGI as opposed to from AGI. Yep. Easy to spot if you just, when you're studying, have a copy of the 1040 and some other forms there to reference so you can visualize where it happens on the tax return. Another piece with charitable giving, they've upped the ceiling to 100% of AGI for cash donations this year. Now, it had been at 60, and certainly not everyday clients are in a position to do 60% or 100% of their AGI for charitable causes, but that's another thing I hope the wealthy respond to in these times.
Well, also that just helps for individuals who are already retired and, they have very low AGIs because they're not working, but they might still have plenty of, other assets that they want to donate, or they have their annual donation to charities that they like to do that, they're basically living off of their savings now. And that extra amount can really help when you're, taking into the accounts for like interest collection or, basically non W-2 income for adjusted gross income.
Yep. The other thing I was thinking about for this discussion was, whether is now a good time to think about a Roth conversion. I'm thinking that on the backside of all of this we're going through, it's not going to surprise me at all if tax rates go up. Right. So, if you're thinking of doing a Roth conversion, would now maybe be a good time to do that. But then it tracks back to, what's it invested in right now? I mean, I'm in that position myself because I've got an older IRA that I used to fund long ago, and it's a decent size. And I'm like, but I've had it mostly in equities as really long-term money. So I'm like, I don't know if I want to take that hit and then pay ordinary income taxes. So I don't know. Have you run into that at all, guys?
I'm guessing that there's a bunch of like backdoor Roth conversions articles going around. I always kind of get a feel for what sort of like pop finance articles are getting popular when my friends start texting me questions about a certain topic out of the blue. And I have noticed that a bunch of people have been asking me about, backdoor Roth conversions or just regular Roth conversions. So I'm guessing it's definitely in the zeitgeist right now.
Yeah, I'm not acting on it right now, has kind of become my decision for at this point, that I'm going to leave it.
Yeah, and it's not something that I've seen a lot of. I mean, back when they allowed, regardless of income, to people to do it, I think it was 2010, 2011. There was a number of people that were asking about it, and several people did convert. But since then, it just hasn't been something that's been that popular. At least, again, anecdotally in my practice. It's
become a little more complicated. And then the only other thing I just had jotted down here to mention, because we've been pushed back to July for regular income tax returns. I think that's what I saw, July.
Yes.
So
July 15th.
I don't know, and maybe you guys do. I haven't read this yet. Does that push back the funding of an IRA?
I believe it does, yeah.
Okay.
Yep.
Because I was going to mention, if it did not, and you've never started a Roth but wanted to, you can open a Roth at this time, and you don't have to fully fund it, but you could open it and designate it for 2019. And so the 5-year holding period clock would start January 1st, 2019, even though
that's a
we're
good point. Yep, and that's correct.
In April, yeah. So that window,
or July, whenever you file, yeah.
Yeah. If that too's been pushed to July, so even throwing whatever it takes to open one, if you think you're going to use a Roth at some time, you might as well get the clock running and essentially shave a year and a half off of it.
Yep.
Definitely. One part about the CARE Act that will actually get tested on, and I think is a great example, is fiscal policy versus monetary policy, and how the CARE Act fits into that. Brendan, do you want to kind of give us an overview about fiscal versus monetary and which one the CARE Act falls under?
Yeah. So, we've had extreme examples of both fiscal and monetary policy intervention as a result of this crisis. Fiscal policy is things that are done through Congress and to a lesser extent the executive branch that impact the spending and taxation of the U.S. government. Monetary policy is implemented through the Federal Reserve and deals with the money supply. So typically the changing of rates, the changing of reserve requirements, and the buying and selling of securities by the Fed to and from the market in an attempt to either restrict liquidity or exploit liquidity. And right now they came out from the Fed standpoint, they dropped rates to 0%. They basically said, we'll buy as much of whatever we need to buy to make sure that we provide liquidity and support for capital markets. And they've done, really everything in their power to this point to make sure that there is nothing standing in the way of the markets to recover from a money supply standpoint. But that only goes so far. We've had a lot of monetary policy interventions since the Great Recession or the financial crisis of 2008, 2009. But we need fiscal policy intervention to make the changes that the monetary policy stuff just doesn't get to. And as a result of the CARE Act, we've got it. So the CARE Act is very much a massive, I think maybe the biggest in history, fiscal policy intervention in an attempt to make sure that, this health crisis, this biological issue does not turn into an economic crisis, or we want to mitigate as much of the economic fallout as we can from this policy. And I don't know if you guys do, ever there be, including the financial crisis, anything anywhere near this in terms of intervention.
Not both things at the same time at such extreme levels. Yeah. Yep. So, and I think that, it was well thought out. It was frustrating kind of watching it get to the finish line,
but it's relatively well thought out, and I think that the bias from Congress is to make sure that we're kind of hitting the pause button here as opposed to hitting the stop button. We're pausing, allowing people to shelter in place, but when we're ready to come back out, that there's jobs to go to, people who are trained in those jobs, and we kind of pick right up where we left off, and that's where a lot of these small business loans and things like that are intended to provide. And hopefully will work. And I don't think it's the last of what we're going to see from a fiscal policy standpoint. I do think, and chime in if you disagree, but I think the Fed is probably close to being done. They'll continue to intervene in money markets and repurchase markets, things like that, on a day-by-day basis. But in terms of major announcements of monetary policy, I think they've done pretty much everything that they're going to be able to do. But I do think we'll see another fiscal stimulus package get laid on top of the CARE Act. I don't know what acronym they're going to come up for it, but it'll be something, and it'll be something that no one will remember down the road. But I definitely think that it was good to see as much as they possibly can at this point in our history, them lay down politics and just get done what needed to get done to really stave off a potentially huge economic impact of this.
Yeah, I mean, I also agree that they're probably done, not because I think they want to be done, but more I just don't think they have any tricks left in the bag.
I mean, there's definitely things that they could do. There's non-conventional tools that they can use. There's, they're never out of ammo, but they're out of the stuff that we're used to shooting. I agree with that.
Fair, yep.
Yeah. This was a good topic choice, though, guys, for the exam takers as well, because more often than not, there is a question on this. And it might just be a description of the stimulus package and is that monetary or is that fiscal, or the question could just be who mandates it. It's the Fed that deals with the monetary, and it's Congress that deals with the fiscal. Either one of those could be tested just by description.
Yep. And also, what is the result? Is it a loosening policy or is it a tightening policy? Mm-hmm. So if everything that you look at right now, everything that we've done is loosening, anything opposite of that is tightening. I mean, we brought rates to zero. We're buying everything in sight. We're dumping a bunch of money from Congress into the system, and we're basically not. We gave a furlough to taxes. So all of that stuff is very accommodative for lower interest rates and a loose policy. And when we come to the point where we can get out of this, everything that they do at that point will be tightening.
Yeah, and for the question of what body mandates these, my tip for the exam is Fiscal has a C in it, and that C stands for Congress. So that's how I kept the two
that's
straight.
a good way to do it, actually. Yeah.
That's good. Awesome.
I'm going to use that, Mike. I'm definitely stealing that for my class.
I needed everything.
Awesome.
Speaking of that, I don't know, financial planning, the exam, all that. Have you ever seen so many acronyms? And I mean, you need a book of acronyms to study this stuff.
All right, so that's the CARE Act, but it's not the only new act Congress put out, at least major act Congress put out. What will be tested on the July exam is the Secure Act, which feels like a lifetime ago with everything that's happened, but is actually fairly new. We did a whole episode on it a little while ago that we'll link in the show notes for anyone who didn't catch that and wants a more in-depth dive into the Secure Act, but figured it would be a good idea for us to kind of just hit on the high points and do a real quick review of the Secure Act since it will be tested on in July.
Yeah, I think you will see some questions this time around. Yeah.
So, should we just dive right in, guys? What would you feel is the biggest takeaways from the Secure Act from your point of view?
Well, again, for me, it was some of these retirement things.
Without question.
Pushing back of the age for required minimum distributions to 72. and then also lifting the maximum age for IRA contributions. So it's conceivable that one could still be working and have compensation income with which to make an IRA contribution while at the same time taking minimum distributions. They might be 75 years old and taking distributions, but have enough income to still be funding the IRA. And you just have to do the math on that. At what point is it really no advantage? But it takes a pretty healthy IRA balance to generate a required minimum distribution of $6,000. So I would do that math if someone's asking you about, well, is it worth it tax wise? It still could be a nice deduction.
Yep,
Definitely.
And I don't remember the specific date, but you had to have turned 70 and a half this year. I want to say it was like June 30th of 1959. You had to be born after that in order to not take the RMD at age 70. I'm sorry, at age 72 versus 70
by the end of last year, right? Yeah.
Yep. So I want to say it was like June 30th of 59. No, 49. Would have been 49, right? Yeah.
Yeah, all I remember is you cannot have already attained 70 and a half at the end of last year. You can't go back with that. And I meant to mention this earlier about these RMDs because a current year's RMD is based on the end of year balance in the accounts.
Yep.
If you think about that, December 31st balances versus where those balances would be today is cause for pause again about, wow, do I want to liquidate that based on that big balance?
Yeah, I mean, right. And yep. And, hopefully by the end of the year, we'll get, somewhere north of where we are now, but it's definitely going to be a consideration for sure.
Definitely. I think for me, my biggest takeaway as far as how it affects the exam and the ways that students are going to most likely run into it is the reversion of the kiddie tax. I remember when I took the CFP exam, I got quite a few kiddie tax questions, so I feel that is definitely going to come up for students taking it in July. The fact that it's no longer based off of the trust tax rates, but instead off of the parents' tax rates.
Yeah, good point, Jerry. Yeah. Something else I wanted to mention was with the Secure Act, it expanded 529 plans on what the payments can go for to come out tax-free. And part of it was homeschooling expenses. This is also up to $10,000 of qualified student loan repayments. So one could shift money from the 529, pay on a student loan that is now not accruing interest. They could, make a big chunk with that $10,000 from the 529. So those are a couple of nice uses for that money.
Yeah, for sure. Like we said earlier, just having more options is always a good thing. Putting those options in individuals' hands allows them to make the best decisions.
Yeah, there were some other nice things in there that we talked about in the previous episode, but I would think all of those are on hold. Part-time employees being allowed to participate in a 401k plan, that's pretty cool. But I doubt that much of that's going on right now, given the state of things.
Right.
Same way with they've pushed back. Used to be if the tax year had already closed, the only plan that you could set up and fund after the year was the SEP. But right now it applies to any qualified plan, which I thought, well, that's great. But on the other hand, what businesses are now in a position to do that, take on? So they're probably not, even though one of these acts, now I'm not going to remember it, increased the credit for offsetting expenses to adopt a qualified plan. And it went up by quite a bit, actually. It used to be like $500, and now it's like $500 per person, up to I forget how many thousands of limit. But, that's a nice thing. But I just don't think anybody's going to probably be doing it right now.
Yeah, definitely. A couple things in here where it's like, all right, it's good to know, good to have, not at the forefront of anyone's thoughts right now.
Yeah.
No, and likely not to be on their mind when they get to reopen. I don't think retirement plans are going to be the first thing that they jump to. But, hopefully it is incentive for them to, because even prior to getting into this, retirement savings was a big issue for our society overall. And this situation certainly hasn't helped that in any way, shape, or form.
Yeah, definitely.
Yeah.
So
just file it away, and we'll revisit it when the time comes. But like we said earlier, we'll probably end up talking about all this numerous times in the coming months.
Right.
Definitely. And if you are looking for that more deep dive into the Secure Act, we'll link the episode down below. There's also a great resource on congress.gov where they did a line-by-line breakdown of the Secure Act. Definitely recommend giving that a read. That's really helpful, but it's definitely something we'll be talking about again in the future. All right. Little bit of a backwards episode today, guys. We saved question of the episode for the very end. Save the best for last.
Yeah.
And this has
Taxes are always the best, right?
Yes, exactly. So this is something that really trips up a lot of students, which I don't know. It seems like a very straightforward topic, but it gives a lot of people a hard time. So we wanted to take a minute just to kind of talk about it and break it down. But I feel one of the best ways to do that is kind of just warm up with a question you might run into on the exam with it. So without further ado, you have a client who has a current tax liability of $2,000. They have a $3,000 refundable credit. How much of a check are they going to receive from the government when they file their taxes? A, 0, B, 1,000, C, 2,000, or D, 3,000? What would you say, Mike?
My buzzer wasn't working. I was trying to buzz in on that one. 1,000, Jerry. I'm going to go with 1,000. Refund.
$1,000 is correct. Now, twist for you, Mike. What if that $3,000 credit was a non-refundable credit? How much would they receive?
Unfortunately, 0. They wouldn't know anything.
Mm-hmm.
But they would not get any kind of refund. The best the non-refundable can do is take you to 0.
Right. So give us a breakdown, Mike. Like how does this work? And maybe if you know offhand any kind of common examples that people will run into.
Yeah, and the only reason that I asked that we get into this a little bit is because this is again good material for the exam. And in the pressure of the exam, folks kind of get it mixed up when they start applying numbers. But one of the things that can help with this is to, again, be studying taxes with a 1040 handy so you can see on the return where these deductions happen. So what you would see in there is first on the tax return, when we've rolled up the income and we've got standard deduction or itemized deductions, and we start getting in then to non-refundable credits. Those are taken first, and then eventually it runs down to the total tax on about like line 15, I think, of the 1040. And that's where we can't go below 0 using the non-refundable credits. The big difference with the refundable credits, and this is where the confusion comes in, a refundable credit is applied after that total tax has been calculated. Mm-hmm. And it's treated like any tax payment the taxpayer has made, be it withholding or estimated payments. These refundable credits are coming in the same category. So where we see confusion is in a problem where they've made estimated payments of a certain amount, and then they also qualify for the refundable credit. Combined, it creates a refund, but you have to treat it like the payment. So like if someone owes if their tax is $10,000 and they've paid in already through withholding or estimates $11,000, and they also qualify for $5,000 in refundable credits, they already are getting a refund because of what they've paid in. So some students will think, well, no, you can't do any more than that, but you can. That $5,000 of refundable credits would go in with the $11,000 that they already had paid, so their refund would actually be $6,000. So you have to recognize what's been withheld already in the problems. That's the hardest thing to decipher.
Right, definitely. I also feel probably where people get tripped up a lot is in recognizing which credits are refundable and which ones are non-refundable. What would you say are kind of like the biggest, most common refundable credits that people will run into?
Yeah, it's a really short list. Most tax credits are not refundable. The biggest ones that a client, we might see with a client, earned income tax credit, but that's a fairly low income benefit. I think it taps out at under $60,000 of income, wouldn't be able to apply it. But a lot of people have that. The biggest one could be a child tax credit, which could be up to $2,000 per child. And it has real high thresholds on it too. It's not wiped out at really at a real low income level. My son and daughter-in-law had their third child mid-year last year. And so tax time came around. I'm like, don't you file your taxes until you have that child's social security number.
Right.
Because that's $2,000 more off of the tax bill. So that
need to start monetizing those kids.
Yes, I love you, my little tax credit.
Yeah.
But that's $6,000 dollar for dollar off of the tax bill for them. That's huge. In general, you've studied this, that a tax credit is better than a tax deduction because the deduction merely saves the marginal bracket times the amount of the deduction. But the tax credit is dollar for dollar reduction of the actual tax bill. So that's probably the biggest one. And then one more I would mention would be the American Opportunity Tax Credit. That can be as high as $2,500, of which $1,400 can be refundable. So you may see
that's like its own class, right? That's partially.
Yes.
So it's not fully refundable. It's just partially refundable, right?
Partially refundable. Yeah.
Yeah.
Whereas the lifetime learning credit, the other educational credit, is 100% non-refundable.
Right.
So in general, the AOTC is the way to go first. If they're in a degree program, enrolled at least half time, all of those other regs that you'd have to comply with, but usually that's the one that you're going to go for first. And then most of the others are all non-refundable. But study the 1040. You'll see exactly, and I found myself on the exam picturing the 1040 and where those deductions happen on either for AGI or on the backside of the 1040 for these tax credits and such.
And that's a really good tip. I hadn't heard that before. I think that's a really good way to do it. This is why I pay an accountant.
Well, it's, and the tax credits, like I said, I just wanted to mention it for exam takers because the income tax software is so great out there. It prompts you for all these questions, and you don't miss these credits if you're using that good software, and the accountant certainly doesn't. But in exam land, it's a different ballgame.
Well, that's a pretty good breakdown of it. It's not super hard. I think people just kind of get confused when it comes to actually calculating it, and maybe they get tripped up when they're doing the calculations and it doesn't quite equal out. But if you just kind of understand the mechanics of it and that core principle, you can answer the vast majority of questions having to do with the credits.
Yeah, we would say that's a definite, right, that you're going to see on the test.
Yeah,
I would.
I would say so. I definitely would say so.
It
Awesome.
may have math. It may have math in it, that I stumbled on trying to explain here. But it also could just be conceptual, the difference between the two.
Right.
Yeah.
And like Mike said, the list of refundable credits is super short. So memorize that list. Memorize that list, and if you get a question and it's referring to credit that isn't on that short list of refundables, you know automatically that it's a non-refundable credit.
Absolutely. And there's some of them that on that short list that probably would never make it into the exam either. I wouldn't expect to see, what's one of the other, the premium tax credit through the Affordable Care Act. I wouldn't expect to be tested on that, but I would expect AOTC to be there. Earned income tax credit, I don't know, because it's phased out at the lower level. But the AOTC, child tax credit, learn those. I think you're golden on the refundables.
Yeah, when I took the exam, I remember seeing the AOTC as the refundable credit. Especially since it has to do with education savings. That's a topic the CFP board loves testing on, because that hits not only tax with the credits, but it also hits education and funding education.
Yeah, which is what education questions are. What is it? 6% of the questions are education. It's got its own category now.
Yeah.
But when you get into this for your exam, make sure you get a current copy of the tax tables that are provided for your exam cycle, because in the past there's been information provided about AOTC and lifetime learning credit. Used to break down how it worked, but now I think they only give you the phase out thresholds, if I'm not mistaken. But so make sure you check that out, see what you don't have to memorize.
Awesome. Well, yeah, that about wraps it up for this month's episode of BIF Bites. Hope you guys enjoyed it. If you have topic ideas, or if there's anything you want to hear the three of us talk about, definitely feel free to send it in. Love hearing feedback from you guys, and always looking for good ideas for future episodes.
Yeah, when all this turmoil is open, we'll have a BIF Bites Fest or something to celebrate freedom again.
Absolutely. Yeah.
Awesome.
Until then, hopefully everyone stays healthy and your families are healthy and you cope well with the solidarity. What am I looking for? What's the solitude?
Yeah, solitary confinement.
Yeah.
Brendan's sporting a nice new beard. It's his quarantine beard.
Yeah.
You're picturing him in his basement, and he's got the beard and the flannel shirt and hasn't showered.
The bars are closed. I feel like I'm like a castaway. I'm a castaway.
Oh, yeah.
As a funny anecdote, I did read the other day that I think it was The Gap put out a sales report, and they said sales of tops were up, but sales of bottoms were down. So
it makes sense.
All those webcam
meetings.
That's funny.
See, but when it's just a podcast, you don't have to wear either.
Yeah, Brendan's just
wear your beard.
Right, we appreciate you turning the camera off, Brendan. That was
yeah. I'm sure. You got to pay to have that camera on.
Yeah, gotcha. Well, you can check out all of our back episodes at bifbites.com. That's also where we have all of our articles and past questions of the episode that you can take a look at. Until next month, hope you guys all stay safe and healthy.
All right, take care, guys.
Everybody. Thank you, guys. Thanks, Jerry. Thanks, Brendan.